Beneath the surface of the current price action, massive structural tension is rapidly reaching a dangerous breaking point. Looking at the network data for June 14th, 2026, the market is sitting on a critical precipice. This chart shows the MVRV Z-score, the standard gauge for measuring market overheating. Notice how the Z-score has officially pierced the 7.0 threshold, entering the upper red band. Historically, when this metric sustains resonance in this upper tier, it confirms the final stages of a macro bull cycle. To see the immediate tactical threat in the spot market, we turn to the short-term holder realized price. On the far right, the spot price grinds directly against the average cost basis of new buyers. This represents the market's most critical support level. Breaking this level shifts the market regime from a buy-the-dip trend into a prolonged structural bear market. Confusion is widespread right now because retail traders are looking in the wrong place for a bounce. This chart displays Bitcoin funding rates, the metric most analysts are currently using to call a market bottom. Over the last few weeks, the data shows erratic, choppy green spikes. The assumption is that a quick flush of this leverage will reboot the upward trend. That assumption is flawed. Derivatives are a distraction from a much heavier force dictating the market. Actual coins changing hands on-chain, the spot supply mechanics, are the true directors of this price action. An extreme divergence in unrealized profit is creating a gravitational pull that leverage cannot fight. To map the impending breakdown, we have to ignore the derivatives casino and track the actual flow of smart money. Right now, billions of dollars in profit exist solely on paper, unbooked network wealth that hasn't been cashed out yet. This chart tracks net unrealized profit and loss, mapping the transition of market psychology. The blue line has firmly crossed into the uppermost red tier, the euphoria and greed zone. In this zone, the fear of losing life-changing gains overpowers the desire for further upside. Market physics at this stage are straightforward. Peak paper wealth demands realization. Theoretical profit creates an automated imperative to sell. Selling becomes a strict mathematical mandate for large funds rebalancing their portfolios. This realization dynamic is what historically caps every major bull run. The Bitcoin network is primed for massive sell pressure because extreme unrealized profits eventually architect their own destruction. Curious tone. If the network is demanding realization, whose coins are flooding the market? This chart maps long-term holder supply, revealing the activity of veteran market participants. Look at the sharp, cascading vertical drop in the blue area on the far right. This decline is active distribution. Smart money is systematically dumping their holdings into retail demand. This calculated, relentless exit differs from the chaotic panic selling typical of retail traders. It creates overhead supply, a ceiling pushing down heavily on the market. This distribution mechanism suffocates upward price momentum, absorbing every new buy order. This endless supply absorption neutralizes positive market catalysts. Institutional and veteran participants are now locking in their euphoria phase profits, effectively capping the broader bull market from above. Why would these veterans sell now rather than holding out for higher round number price targets? The long-term holder realized price reveals the advantage these players hold. Notice the massive gap between the current spot price in black and the lower orange line. That orange line represents an incredibly low average cost basis for veteran buyers. Long-term holders can dump massive volume into lower prices and still secure historic multiples on their initial investments. Contrast this comfort against new retail entrants who have zero margin for error in a choppy market. This wealth cushion makes long-term holders insensitive to short-term price drops. They are still up 300% even if the price falls by double digits. This profit asymmetry creates a relentless wall of sellers that will not stop distributing until their target supply is exhausted. Every coin sold by a veteran must be bought by a new entrant downstream. The short-term holder realized price shows the exact point where these new buyers are trapped. We can see the current day's price action resting precisely on the orange line. This orange line is the exact mathematical break-even point for the entire cohort of recent buyers. If the relentless selling for long-term holders pushes the spot price even slightly below this line, the entire retail class instantly falls underwater. A breach here triggers a predictable cascade: panic, automated stop-loss triggers, and a rapid liquidation event. The short-term holder realized price represents the psychological and structural floor of the entire current cycle. Market action for the next 7 days is an unavoidable, high-stakes collision between two massive vectors. Heavy momentum is crashing directly into a rigid but brittle barrier. On one side, relentless macro distribution from long-term holders applies constant downward force. On the other hand, fragile short-term support is currently absorbing the blow, unable to hold out indefinitely under this heavy weight. If smart money selling velocity remains constant, the short-term holder support will crack. Profit-taking is currently the dominant market reality. Until the veteran holders stop dumping, the survival of the bull market hinges entirely on a single strained line of support.